Ever wonder why the value of the Australian dollar matters to you? It's easy to think of currency as something only bankers or traders care about, but the reality is, it touches almost every part of your daily life. Whether you're planning a holiday, shopping for imported goods, or even just keeping an eye on your investments, the ups and downs of the Aussie dollar can have a direct impact on your wallet. It's not just for Wall Street. Currency shifts affect your travel, investments, and even the price of imported goods. When the Aussie dollar is strong, your money goes further overseas, and imported products can become more affordable. But when it weakens, you might notice your holiday costs more, or that your favorite imported snacks are suddenly pricier. The Aussie dollar is making headlines, and financial giants like Goldman Sachs are suddenly optimistic. This isn't just a blip on the radar. Big players are watching closely, and their outlook can influence markets and even government policy. Their new forecast points to a stronger Aussie dollar, thanks to bold moves by Australia's central bank. When experts start predicting a rise, it can shift how investors, businesses, and even everyday Aussies make decisions about spending and saving. The Reserve Bank of Australia, RBA, just raised interest rates, signaling a serious approach to inflation. By increasing rates, the RBA is trying to keep prices stable and protect the value of your money. But it also makes the Aussie dollar more attractive to global investors. When a major central bank acts first, global markets pay attention, and so should you. These decisions can ripple across the world, affecting everything from mortgage rates to the cost of your next overseas trip. We'll break down what's driving this confidence, what hawkish means when it comes to central banks, and how these changes could impact your savings, investments, and travel plans. Understanding these moves can help you make smarter choices with your money. By the end, you'll know how global currency moves can hit your wallet, and how to use that knowledge to your advantage. Let's dive in and explore why the Aussie dollar is suddenly in the spotlight, and what it could mean for you in the months ahead. Let's get specific. Goldman Sachs has just made headlines by sharply raising its forecast for the Aussie dollar, signaling a major shift in how global banks view Australia's economic prospects. This isn't just a minor adjustment. It's a bold call that's caught the attention of investors and analysts worldwide. In the next 3 months, Goldman now expects $1 Australian dollar to be worth 72 US cents, up from their previous estimate of 68 cents. That's a significant jump in such a short period, reflecting newfound confidence in the Aussie's strength against the US dollar. Looking further ahead, their 6-month forecast is even more optimistic, with the Aussie climbing to 73 cents. And in a year's time, they see it reaching 74 cents, a full 4 cents higher than their previous 70-cent call. For currency markets, where even a 1-cent move can be big news, this is a substantial upgrade. So, what's behind this surge in optimism? The Reserve Bank of Australia's recent rate hike is a game-changer, making Australian assets more attractive to global investors. Goldman also believes the Aussie dollar has been undervalued for some time, and now it's poised to catch up. According to Goldman, this isn't just a short-term reaction to news headlines. They see a durable, long-lasting trend, with the Aussie dollar steadily closing the gap to what they call its fair value. This could mean more stability and strength for the currency over the coming year. For investors, businesses, and anyone with financial ties to Australia or the US, these upgraded forecasts serve as a valuable roadmap for the year ahead. Whether you're trading currencies, managing investments, or planning international transactions, these numbers matter. A 4-cent upgrade in a single year is a huge move in the world of currency trading. Goldman's message is clear. The Aussie dollar has room to run, and the market may be underestimating its potential. Understanding these upgraded forecasts and the reasons behind them can help you position your finances for what's next, whether you're an investor, a business owner, or just keeping an eye on global trends. So, what's driving this dramatic shift in sentiment? Let's dive deeper into the factors shaping the Aussie dollar's outlook and what it could mean for you. The RBA's recent rate hike is the spark behind the Aussie dollar's surge. By raising rates before other major central banks, the RBA signaled it's serious about fighting inflation. Higher rates make Australian dollars more attractive to investors, boosting demand and value. This move positions Australia as ahead of the curve, drawing global capital. Goldman Sachs expects at least one more rate hike soon, especially if inflation stays high. Investors are already betting on more action from the RBA, which could keep the Aussie strong. The next key moment? Watch the upcoming inflation data. Hawkish means the central bank is focused on fighting inflation, usually by raising interest rates. For borrowers, this means higher costs on mortgages, credit cards, and loans. For savers, it's good news. Banks may offer better rates on savings accounts and CDs. Retirees and those on fixed incomes could see higher returns on safe investments. The RBA is walking a tightrope, cooling inflation without triggering a recession. For you, it's time to pay down high-interest debt and look for higher-yield savings options. Knowing the RBA's stance helps you adjust your financial strategy. Stay nimble as rates rise. Currency values are all about comparisons. When we talk about the strength or weakness of a currency, it's always in relation to another. In this case, the Australian dollar's performance is closely tied to what's happening with the US dollar, the world's most traded currency. The Aussie's recent rise isn't just about Australia's own economy. It's also because the US dollar is facing its own set of challenges: softer US economic data, signs of slowing growth, and a Federal Reserve that's becoming less aggressive with interest rate hikes. When the Fed signals caution, it can make the US dollar less attractive to global investors. If the Fed pauses or even cuts rates while the Reserve Bank of Australia continues to hike, investors start to look for better returns elsewhere. That often means shifting money from US dollars into Aussie dollars, searching for higher yields and more attractive opportunities. This divergence in central bank policies is a major force behind the rising AUD-USD exchange rate. The bigger the gap between the two, the more the Aussie tends to benefit. Think of it as a seesaw. When Australia's rates go up and the US slows down, the Aussie dollar gains ground. The balance tips in favor of whichever country is offering higher interest rates and stronger economic signals. If both central banks were equally aggressive, or if their economies were moving in sync, the exchange rate might not budge much at all. It's the difference in direction that creates movement. But right now, Australia is leading the way, and the US is lagging behind. That's why the Aussie is outperforming the greenback. That's why analysts and traders are watching both economies so closely. Every new data release, policy statement, or economic forecast can shift the balance and move the exchange rate. The interplay between these two currencies is key to understanding where the Aussie might go next. It's a dynamic relationship, constantly evolving with every economic headline. So, keep an eye on US economic news. It matters for the Aussie too. The story of the Australian dollar is never just about Australia. It's always about the global stage, and especially about what's happening in the United States. No forecast is bulletproof. Goldman Sachs highlights 3 big risks. First, a sharp drop in metal prices could hurt Australia's export earnings and weaken the Aussie. Second, if US consumer data tanks, global growth fears could spark a rush to safe haven currencies like the US dollar. Third, a tech stock sell-off in the US can spill over, making the Aussie less attractive as investors flee riskier assets. These risks show how quickly things can change. Commodity slumps, global slowdowns, or stock market shocks can all derail the Aussie's rise. For investors, it's a reminder to diversify and not bet everything on one outcome. Currency markets are complex and interconnected. Stay alert to global headlines. They can move the Aussie in a flash. Even the best forecasts face turbulence. What does a stronger Aussie dollar mean for your wallet? If you hold US dollars, your savings don't change, but buying Australian goods or traveling down under gets pricier. For investors, a rising Aussie boosts returns on Australian stocks for US investors, but can hurt Aussies holding US assets. Currency moves can add or subtract a kicker to your international investments. Now's a good time to review your global portfolio and consider exposure to Australia. True diversification means thinking about both stocks and currencies. A stronger Aussie also means higher prices for Australian imports in the US. Think wine, lamb, or surf gear. For exporters, it's a balancing act between profit margins and competitive pricing. Exchange rates hit everything from your investments to your shopping cart. Stay aware and adjust your strategy as currencies shift. Planning a trip to Australia? A stronger Aussie dollar means your US dollars won't go as far. For example, if the exchange rate rises from 0.68 to 0.74, your travel budget shrinks by hundreds of Aussie dollars. That could mean fewer splurges on tours or meals. To save, consider booking flights and hotels now to lock in current rates. Some travelers even buy foreign currency in advance, but watch out for fees. For Australians visiting the US, it's the opposite. Their money stretches further. Exchange rates can make or break your travel plans, so timing matters. A stronger currency is great for outbound travelers, but tough on visitors. Plan ahead to get the most from your money. To sum up, Goldman Sachs is bullish on the Aussie dollar, thanks to the RBA's hawkish stance and potential US weakness. This could boost your Australian investments, but make travel and imports pricier. Risks remain. Commodity prices, global slowdowns, and market shocks could change the story fast. For you, it's about staying informed and flexible. Use these insights to adjust your debt, savings, and investment strategies. Global currencies may seem complex, but understanding the basics helps you make smarter financial moves. Stay curious, keep learning, and take control of your financial future.